Mark Randall of the Johannesburg Stock Exchange, or JSE for short. Welcome to David Anderson talking market data. I think at least we're in roughly the same time zone. I can't remember what the time difference with, but it's not as bad as when I talk to people in the Far East or even in the Americas. So I'm glad of that. Mark, I said to you beforehand we're going to put up your LinkedIn and the Johannesburg Stock Exchange website so people can read about that. But just to kick things off, funnily enough, we've talked a little bit recently, but I haven't known you that well as some of my other guests, so I've known for donkey's years in my 41 years. But in the brief time we've got to know each other, it's been a pleasure. Tell us a little bit about Mark Randall. I think you spend quite a chunk of your time at the JSE. I looked it up on LinkedIn. And tell us a bit about JSE.
You're right, David. I'm absolutely a lifer at the JSE, but thank you for having me on the show. I was actually wondering if the time zones don't align, who gets to draw the short straw. But I'm pleased that we are more or less in the same time zone.
So I like getting up early, getting it up early and done.
So I run our information services division at the Johannesburg Stock Exchange. I'm South African, and I've been at the JSE for around about 15 years. Most of that in the information services space, although I do come from more of a data analytics and quantitative and index methodology background, and slightly newer to the commercial side of the business. But of course, the two do go hand in hand. So I'm an actuary by training, so very much a quantitative and data kind of person. But been in my current role for about 8 years, since 2018, 7 years rather. So that's me. I think the JSE, a very interesting story. I guess very far away geographically from most of the other people that you speak to on a regular basis. So great to get some time in the show. Thank you. I think the biggest exchange in Africa in terms of market cap, the largest exchange in South Africa, although we do have a competitive landscape. And if I think about the exchange at a very high level, we operate 6 different markets. So 2 cash markets, equities and fixed income, 4 derivative markets. We own the CCP, the clearinghouse for derivative markets. So we really try to get involved in everything from trading through to clearing. Our listings authority is in fact part of the exchange in South Africa, which is a little bit of a global anomaly. So we do have a separated regulatory branch that looks after listings and in fact a market regulation as well. So it really is an end-to-end country exchange. We're trading about 1.2 billion, 1.3 billion US a day in the equity market. So I think pretty healthy from that point of view.
And I mean, was there only ever one stock exchange, futures exchange in South Africa? I mean, I'm thinking to my conversations with Jeff Kimsey about the US markets, where there were all these little markets like Cincinnati, Boston, Philadelphia, etc. Obviously now New York is the main focus. And I remember in the UK, I mean, there was a Manchester Stock Exchange and there was a Birmingham Stock Exchange years and years ago. South Africa, I mean, what?
I think these things tend to run in cycles, and South Africa follows very similar cycles to other markets. So yes, certainly over the long history of the JSE, we have had some consolidation in South Africa. I think first of all, the South African Futures Exchange we acquired, and brought in some of the derivative markets, and then the Bond Exchange of South Africa we brought in a little bit more recently. To kind of ramp up. So there has been a phase of consolidation. I think more recently, over the past 5 or 6 years, there have been some enhancements to the licensing and regulation regime. So we have seen some new exchanges coming to the fore. Some of them competing directly with the JSE in terms of equity, and some of them following slightly more niche approaches.
A cruel question, but who is the next biggest competitor? I know SIBO pop up all over the world. Is SIBO active in your market?
Competition is interesting because people assume it's just liquidity. I think where South Africa and maybe emerging markets in general really struggle with competition is in the listing space. Is how do
Really?
we convince our domestic companies to list on the local exchange as opposed to going to chase capital offshore? So when we think about competition, of course we take a lot of focus and attention on our local competitors, but the market for global capital and for trading is absolutely global. So we pay a lot of attention to what the big exchanges are doing, what markets they're operating in,
I mean,
where they're innovating, and how we compete with that.
you graciously gave me a list of topics. I had my own more generic ones, but I like yours because I think they focus on the nuances, the differences, if you will, of talking to you as opposed to talking to the London Stock Exchange, Deutsche Börse, or NYSE, these sort of mega exchanges, and you're a regional exchange which has a sort of different challenges and opportunities and what have you. I mean, actually, what you just mentioned there, listing, because I'm aware of even the London Stock Exchange. I think all stock exchanges around the world are struggling with this. So much capital wants to go to the US. So much capital wants to go to the US stock markets, the S&P 500, the Magnificent Seven. It's sort of, and I know in the UK there's a political debate about how does the government persuade UK savers, UK money, to be invested on the UK stock market rather than, because it's so easy now to invest in the S&P 500. And that, if you look at an awful lot of investment advice, that seems to be the sort of simple, quick, easy way to do that. If we talk about you guys, listings obviously is the first point, and then the sort of market data and the trading going on. I would like the conversation also to try and encompass Africa as well, because I know in my FISD travels, I think we have the Nigerian exchange, the Nairobi exchange, is it Dar es Salaam? I mean, we've got some regional exchanges, but I've never fully understood Africa as there's an African Federation of Exchanges, I think.
Yeah, that's right.
And I don't, yeah. So I mean, South Africa, Johannesburg Stock Exchange, as an emerging markets, if you're part, do you consider yourself part of this emerging markets world? I mean, how does that manifest itself? What are the challenges for you? I mean, is it that people forget about you? You're off the radar because you are arguably a long way away, that you just don't get the attention that you deserve?
David, I think there's maybe an internal answer to that, sort of a national answer, and an external answer around global investors, and both are really important to us. So let me start with the outside in answer. And I do think a lot of global money is largely benchmark cognizant, and investment trends do in some shape or form align to EM indices, for instance.
Yeah.
And South Africa very much an emerging market. So one metric that we do track quite closely is what is our country weight in the various top tier emerging market benchmarks.
Yeah.
And we probably around about 4% at the moment. And there is a concern that if that number gets too low, then effectively you become too small to worry about, and really just a rounding error at the tail end of your performance profile. So certainly we are very sensitive and conscious around the level of direct foreign investment into our local markets. I think how we try to promote that. I think there's a few things. I think it's really important from a country point of view that despite being an emerging market, you can compete on, the rule of law and right to assets and ability to repatriate your dividends or your capital, confirmation, a commitment around settlement processes, stable exchange rates, the kind of things that you'd expect to provide some kind of stable backdrop to your investment. And then from an exchange point of view, I think it's incumbent on us to make sure that our technology from a trading point of view is world class. And we use the MIT platform built by the LSE group for that. So very happy with the quality of our technology. And then I guess bringing it back to data, but it's incumbent on me to make sure that the large data vendors that are carrying our market data across the world are well looked after, can access our data, do have the right contracts in place, and that they can engage with us on the same basis that they would engage with any other developed exchange, I guess, albeit at a different scale. So that kind of outside in view, I think there's a lot the exchange can do and should be doing. At the end of the day, though, it is a function of scale. And if there aren't enough investment opportunities in your domestic market, it's going to be a challenge to attract foreign investors. I think for local investors, yeah.
I mean, what's the proportion of foreign investment versus local? I mean, what's the balance?
Yeah. So two things. I think first of all, the JSE in particular has got quite a high level of dual listed counters on our exchange,
right?
Into London, into Europe, a little bit into Australia and US. So that's been quite an interesting sort of arbitrage play for some types of investors, because there's a time zone play there. That's probably about 20% of our counters by number, or 20 to 25 are dual listed. In terms of trade activity, we're probably seeing 10 to 15% of our trade coming directly from offshore. These things are sometimes, like any analytics, they can be a bit tricky to measure, because if there's an OTC swap transaction, for instance, and a local bank hedges that in our market, we may see that as a domestic trade, but actually it's a foreign underpin. So I mean, you always need to dig through the numbers a bit, but we estimate around 10 to 15%.
And I mean, it's interesting. We talk about listing, we talk about trading, we talk about information services and clearing. I suppose those are the four income streams that a typical exchange gets. Although, as you said, the listing sits slightly outside of your framework. And again, I suppose for us in the market data world, the information services world, it's a chicken and an egg. Which came first, the market data or the trading? Because they are so interdependent. Although I'll add one observation on top of that.
Right? I mean, end of day analytics and indices we can talk about, but at a real market data feed level, you can't have trading without market data, and you can't have market data without trading.
Yeah,
and it's the same systems, people. It really is two sides of the same coin.
Yeah, they're sort of it's a continual cycle. Although an interesting observation I always make is a lot of people might be looking at market data either with no intention of trading, just because all markets are interconnected and people will want to keep an eye on the Johannesburg market, even if they're not trading on it. And then there's also a lot of people who look at data, and one of the decisions they might make is not to buy something. So I always, you can't, the correlation between market data and trading isn't a precise one-to-one one. There's probably more interest in market data than there is in trading sometimes. That was a bit of waffle from me, just an observation. I mean, again, looking at the South African market, another thing I've become, I will admit, dimly aware of, is that Cape Town is a lot of the buy side and Joburg more the sell side. I mean, is there a big South African buy side? I mean, how many assets under management are there in the sort of South African buy side? And a lot of that money, is that invested on the Johannesburg Stock Exchange?
Yeah. So geographically, you're dead right. But we see a lot of the financial market infrastructure and a lot of the sell side and banks headquartered in Johannesburg. I guess that's probably the national sort of business hub, if you like. Having said that, Cape Town is one of our really big cities, and over time we've seen a really deep concentration of asset managers in particular in Cape Town. I think, David, for the longest time, South Africa has had some exchange controls.
Right.
That has limited the sort of the investing a lot of domestic assets offshore. That has softened over the years. We still see some of it really in the prudential authority space. So pension fund money in particular is subject to a cap on the amount that can be invested offshore for domestic investors.
Right.
Obviously not for foreign investors. So we do see this natural sort of crowding in or concentration impact for managers that are running pension money to invest in South Africa. And I think that's been one of the really strong characteristics of the South African market, that there's this really deep institutional pool of money chasing domestic assets. And that has really been a feature of the market. That has relaxed over the last couple of years. So we have seen a steady increase in the amount of money offshore. Some of those directly offshore, some of those through JSE listed foreign-based assets. So you spoke about S&P 500, for instance. I think you can trade that ETF on probably every exchange in the world, but certainly you can in South Africa. And we've seen a lot of interest in offshore assets traded through sort of rand or local currency bank accounts or trading accounts. So it's quite an interesting market. But I think the major takeaway is that there are really, really well established and world-class asset management and asset owner institutions, and that we do have a deep and liquid institutional sort of natural demand for assets, largely due to our domestic pension industry and the large levels of employee savings, if you like.
It's interesting when you talked about capital controls, because I was having another conversation recently. In fact, something I didn't mention to you before, but I'll throw it in now just to have a bit of fun. The whole trend of 24 by 5 or not 24 by 7, but this push, because the Asian markets are very interested in wanting to trade in North American securities sort of 24 hours a day. And again, it's yet again the US market sort of elbowing their way into a wider appeal. I don't know how that impacts you guys. And again, in the conversation I was having recently, we were talking about India. India's a market that's going gangbusters, but India has had, and I don't fully understand, quite a lot of protectionism. The Indian government has quite a lot of controls. I went to India recently to teach my market data course there, and I don't think I could buy rupees in England. I had to buy them in India. So there are currency controls. And I think where I'm going to is this conversation about money, South African money being allowed to escape South Africa. And were there ever any controls? Are there any controls about incoming money? Or is it like, come on, welcome, come in? I mean, some markets, and again, excuse my ignorance here, don't particularly like foreign investment, or have not at some point in them. I'm just throwing this all at you. I mean, in South Africa, has there been any restrictions on money coming in?
So the short answer is no, David, and I think we fully accept that foreigners participating in our market is a critical part of our liquidity pool, and definitely something that we want to promote and encourage. But you're dead right. I think there is a very broad spectrum across emerging markets of how the regulator thinks about the national interest and protectionism, and what exactly they're worried about. I guess in South Africa, because for a long run we've had controls on domestic money leaving the country, I think there's a sort of nagging concern that says if that was to all be released in one go, what kind of short-term impact would that have? And how do we mitigate that? I think that's one concern. I think the other concern is that, and this is more from a prudential point of view, to say, if you've got liabilities in local currency, does it make sense to invest all your assets in a completely different offshore currency or different asset, and how do you think about the risk management and asset liability matching on that? So I do think the shift is probably moving somewhat away from capital controls and more to sort of prudential controls, to say, how do we make sure that you're managing your liabilities and domestic public interest in the most effective way. Your point about 24/7 is really interesting, though. And as I said earlier, exchanges, no matter where you are in the world, you don't play in a vacuum. There is one vast interrelated web, and And I mean, we'll touch on this in a minute when we get to data, but it's often the same consumers and the same investors and the same traders and the same banks operating in multiple markets. And of course, we are going to, think about what is it that's going to continue to attract foreign investors into our market. And there are some big global moves. I mean, the South Africa still on T+3 settlement in terms of equity trading. We're definitely not implementing 24/7 at the moment, but we have to pay attention to what other exchanges are doing. And I guess the two questions. I mean, like most decisions, you look at the pros and the cons, right? And the pros are obvious. You can react to market data in real time. You don't have to wait for your market to open. You can offload or take positions as and when you need. I think on the con side of you've got to think. You've got to think two things. You've got to think: does it actually enhance my market? Are we going to get more liquidity? Is it going to help centralize or fragment liquidity? But, what does that do to price formation? And then maybe there's a more practical question around, there's a whole industry of let's call them loosely back office people out there that are doing end of day processes, that are pricing funds, that are getting out retail reports. What is the impact on that community? And how do we work with those clients to make sure that we're not really upsetting that whole apple cart just for the sake of it?
And I've heard some people say, well, it's definitely not 24/7, it's 24/5 because we still have a weekend. Yeah. But then I've heard some people say 23 because you're still, all that administration, there's all of that stuff that if you run something 24 hours a day, which is non-stop, when do you fix things? When do you sort out administration? So I think that's an issue that the world is going to wrestle with. Well, we're still talking about this sort of regional dimension. What about Africa? I mean, South Africa. Are you part of this wider African ecosystem, and how does that manifest itself? What is going on elsewhere in Africa, and how do you affect that, and how does that affect you?
So I guess for fear of stating the obvious, Africa is a very big place.
Yes, diverse place, a very diverse place.
Well, this is the thing, right? I mean, a lot of countries, a lot of cities, a lot of exchanges, a lot of languages, a lot of currencies. But I think there's a common thread for Africa that says there is a very young population, and growing population. And for people that do demographics and think about future productivity and growth, compared to some more developed markets where the pyramids are slightly more inverted, you start to get the sense that at some point Africa's time will come. A lot of investment in education, a lot of natural resources, a lot of young and vibrant energy, and I think because of some of the constraints, we've seen a lot of innovation in South Africa, whether that is around mobile payment systems, or other types of technology innovation. So I really get a sense that South Africa as a continent is on the cusp of something that could be really great. Now, what that growth looks like and how consistent it is across all markets, and what drives it, I think will evolve over time. But I think the reality is that the players that are in at the beginning are more likely to share in the upside and the growth and the story. So I think when people think about Africa, I think there's certainly an acknowledgement of potential. There's an acknowledgement of the seat at the table. We're running a G20 in South Africa this year. We've got a seat at the table. We're part of a global ecosystem. And I think African markets are working really hard to ensure that they are relevant, that they're investable, that they're doing the right things. Now, whether that massive boom comes in 2025 or in 2030 or when it comes, I think is a question of when, not a question of if. So I do think that people are starting to take notice. As we think about understanding the local currency and forex controls and trading systems and broker networks and data distributions. These are things that Africa is steadily improving at.
I mean,
A couple of exchanges. So there's an ASEA Corporation, which is the African exchanges. I think there's a lot of regular conversations there. There's a COSI, there's a North Africa. So there's a number of different sort of bodies where we think about working together. I would say there's generally sort of working parties where the exchanges visit each other. We see that quite often, knowledge sharing, thinking about growth together, thinking about standardization of networks. So there's a lot going on.
And maybe that's a segue into the data part of the conversation. Because it strikes me that there's two parts to the data conversation. One part, which relates to what we've just been talking about. I mean, data arguably is a promotional tool, an advert for what's going on. And so, I presume there is an element in your thought process vis-a-vis data about how to promote South Africa, how to persuade more people to invest in South Africa and on the South African exchange, and then loosely linked with that and more broadly Africa. Yep. But then there's also a more generic, you are an exchange, and many exchanges have this common set of obstacles and issues and opportunities. And I think one of the things you've alluded to is the whole process of interacting with you and interacting with the data, buying the data, contracting for the data, reporting on the data, and making that easier, reducing the friction in it. So I'm throwing an awful lot at you. I mean, two parts. Yeah. Let's just, as a segue, I mean, how much does you in the market data world, in the information services world, what part do you play in promoting South Africa and the Johannesburg Stock Exchange, and maybe even Africa generally, what we were just talking about a second ago?
Yeah, I think a really important part, and I guess it comes back to my earlier points about trading and data almost being inseparable. And of course, as many consumers as there are for data, that's how many use cases we have. And so maybe that's a slightly different topic, but certainly, if you're sitting outside of South Africa and you don't have any access to JSE data, you will never have any interest in trading the country, or trading the local markets. So it is really, really important for me to ensure that South African data does reach every market that may be interested in it. Now, of course, we rely very deeply on our vendor and aggregator partners. Yeah. We're not going to go and reinvent the world, but at the same time, I think there's an imperative to modernize and create flexibility and think about new types of consumers. And there's a whole discussion there around cloud modernization, in particular, and how that can take some of the costs and friction out of the ecosystem. But I think what's interesting, David, is it's not just, I think, anymore about real-time data. Yeah. I think benchmarks are really important. The JSE has had a sort of a very long index partnership with FTSE Russell for our benchmarks, but we've really tried to hang on to the local nuance around that. But I mean, as an example, our broad market benchmark last week tipped over to 100,000 points for the first time, and that kind of psychological milestone is something that you can leverage to say, have you heard about South Africa? We are here. There is growth. It is responsible. It's reputable. Here's some index data. Here's some analytics data. I mean, here's some non-res data. Here's some real-time data. So these things, it comes as a package, I think.
I mean, are you impacted by the shift from active investing to passive investing, which is passive, very much dependent on index benchmarks? I mean, me personally, I keep thinking I should shift out of my pension stuff much more to index funds because they're frankly cheaper and easier. And not everybody, a lot of people say they often outperform all the active managers. And I suppose there must be an audience out there who said, look, I want to invest in South Africa. I don't really know all the South African companies, so I want to have a part of my portfolio in South Africa. So I presume that creates the demand for the index fund. Well, I mean, what are the obstacles? You're sitting there. Obviously, you want your data to get out there because you want to promote the South African market. And here's a more contentious point, you want to make money. You're a for-profit company and you want to make money, which is one of the more controversial areas, because there is a section of the market that somehow, doesn't want you to make money, or think it's somehow wrong that you make money and that you're somehow taking advantage of some position you've got. I mean, it's a sweeping observation, but you know what I mean. You know where this is coming from. I mean, what's your answer to that? What's your thoughts on that?
Yeah. So the JSE is demutualized. We are a listed for-profit company. So there is absolutely a set of shareholders. There are annual reports, there are earnings numbers. People care about that very deeply. So I think that's the reality. Of course, exchanges aren't the only for-profit entities in the ecosystem. But I think there's this kind of sense that financial market infrastructures more broadly do have almost a dual hat that says there's a sort of a critical component to run trusted, credible, well-regulated market infrastructures, whether that's trading or clearing or the CSD, whatever it may be. Almost as a utility basis to some extent, right?
Yeah.
And that's largely in our DNA, right? Because we care deeply about uptimes and service levels and meeting contractual obligations and helping customers with workflows. All of those things are deeply in our DNA. Having said that, we charge a fee for those services. And I think the exchanges that perhaps have done well, and we certainly think about this very, very deeply. There's this thought that says you cannot over-index on one segment of your business. You cannot say the only place we make money from is trading, and therefore the only way we can grow is to increase trading fees. Similar in my space, I can't say the only place I make market data revenue is real-time feeds for trading, and therefore that's the only lever I've got is to ramp up those fees. And I've been very disciplined and careful, in fact, about above inflation fees, particularly in the real-time space. Having said that, there are a lot of other opportunities open to exchanges. In my space, there's analytics and indices and other things that are purely competitive, and there's absolutely no argument to be made that there's any regulatory basis for the source of that data. But then for the rest of the exchange, there's things like, do you expand into a data vendor business like some have done?
Yeah.
Do you think about a technology provision business? Do you think about geographical diversification? The JSE has bought a transfer secretary business, which is in a slightly different space in the value chain. So there is this imperative to say, how do you diversify your earnings away and therefore reduce the sensitivity?
I've definitely picked that vibe up from other exchanges as well, this diversification, because there is potentially an observation that perhaps the classic real-time pricing is quote unquote commoditized. That's one thing, and liable to be regulated in some way, as we're seeing sort of in the European markets, and as has been the case with the consolidated tape in the US for a long time. So that diversification and that adding value, because again, these are vast generalizations. I think where sometimes the criticism, and I take no sides, I'm just what I hear, the criticism sometimes leveled at exchanges and frankly index providers and certain other quarters is they've just raised their prices without actually adding any value. If they were to add value and ask us to pay more, we could sort of understand that. But when they're just giving us the same stuff they've always given us, but now it's a massive increase way above inflation, we struggle to understand that. We're not going to solve this today. I mean, this is a political discussion. Let's delve in a bit more. I think an area that you guys have invested heavily in is this reduction of friction, of trying to make it easier to do business with the JSE. Is the projects you've done, I know the stuff you've done with Data BP, etc. Is that a market data project, or is it are you linked with your trading colleagues as well? Is it all one thing, or is there a market data specific project, if you will, or are, or
Yeah.
is it an overarching project that also includes trading?
I think there's a very specific project around modernization of data infrastructure, and I guess data workflows to some extent.
Yeah.
So I almost think there's two sides, pieces to this puzzle. There's a piece around the technology and the infrastructure, and there's a piece around the client workflows and processes engagement.
So
And of
technology
course,
and
the
commercial.
need and delivery, and I mean, it's often the same process, right?
Yeah.
Entitlements come with a client process and a technical process, but you have to solve for both of them. So what we've spent a lot of our energy on, probably since 2022, more or less, the past couple of years. I think first and foremost, we said, let's tackle the technology problem. And I think what we found is because we operate 6 markets, and because we're doing trading and clearing and settlement, and we're kind of all over on the value chain, we've traditionally found it quite difficult sometimes to really access all of the data assets that we want to access. And I'm talking
Right.
now specifically data at rest, end of day history,
Yeah.
as opposed to real time feeds, which I think are well serviced up on multicast as things are. So I'm not trying to compete or upend the trading part of our business, but I think there are a lot of people out there that are interested in a lot of JSE data that is not real time, and it's not latency sensitive, and it's not for trading. And how do we service those customers? So I think the technology piece has been threefold. There's a piece around, let's get all of our data assets out of our transactional systems. Let's get them into the cloud where they are optimized for delivery, for analytics, where they kind of ring fence for the IS, information services business, and we can actually start to move a little bit more quickly with a bit more flexibility. So we've more or less wrapped that up. Then there's a piece around a kind of, how do you deliver data to clients, right? And I guess at the moment it's either email or FTP are the options. So we've invested a lot into say, how do we get it out over API in modern formats,
Right.
modern file formats? How do we think about technical authentication? Can you bring your own identity with you? Do we have to manage all of that? How do we think about usage reporting? How do we think of like a very simple example, right? Is that if the exchange is publishing a closing price file at the end of the day, that file could come out in maybe a 15 to 20-minute window, depending on how some of the processes run. So we sit with clients, sort of polling our FTP site to say, is the file there yet?
Of
Is it
course.
ready? And
That'll
we say, I
get
mean, we don't want to do that. So we can now ping the client to say, wait for our message. We'll tell you in a processable way, so that your computers and batches can come and pick up the file, as opposed to this active pinging. So and then the third piece about the technology is around how do you create data product more quickly, more flexibly, without these long lead times, without long notice periods. So that's the tech side. I think the client workflow side is probably a little bit more interesting for the non-technology people.
Just if we can, I mean, just if I can not pick you up, but just delve into some of the things you said on the technology side. Because one of the things you wrote in the notes you kindly sent to me was multicast in the cloud. Because you've got the real time. And again, help me out here. Is the JSE feeds, are they multicast? Because not all exchanges, some are TCP/IP, but you're multicast. But again, one of the cross-industry challenges is that there seem to be problems in real-time market data in the cloud, because the cloud doesn't cope with multicast particularly well. I mean, the end-of-day pricing, the historical pricing, all of that stuff, I think people have said, yeah, that works very well in the cloud. I mean, what's your experience? What's your observation? What's your advice?
I don't know if I'm wise enough for advice, David, but I'll maybe answer the others. I don't think the JSE is trying to solve multicast over the cloud right now. I think there are a lot of really big organizations with a lot of R&D capacity working on this problem, and what they come up with, I think, will probably propagate throughout the industry. over time, assuming that there's a business case and a need for it. So yes, our pure low latency trading or latency sensitive trading is absolutely based on a multicast native etch binary feeds, where latency is a really, really important issue. We've seen a lot of, we've probably got about 70% of flow coming through our colo center. And if you're in colo, then, obviously you're less worried about.
So it's horses for courses. You cloud where cloud makes sense, but
Correct.
It doesn't make sense yet. I mean, again, I'm conscious.
That's a really important point, right? Because I'm almost in the space to say, well, if I'm going to deliver something over the cloud, then it's probably not going to be for high frequency trading.
Yeah.
What is it going to be for? Is it going to be for a ticker board or a website feed or a risk management feed or a market replay or surveillance feed? Now those are all things where latency is less of an issue.
And that's a big chunk of the market.
Correct. And in fact, those consumers maybe don't want to decode the feeds. Maybe they don't want to resequence it. Maybe they want to get it in a guaranteed sequence decoded TCP feed. And how do we service that use case, right?
And I think, again, I'm conscious of time. I knew we'd run out of time. And I know analytics is something you wanted to talk about. And I was teaching my course last week. And when I talk about exchanges and data feeds, I say there's a particular audience. Yeah, the hedge funds or HFT, prop traders or whatever. And they want everything ultra low latency and raw. Don't mess with it, JSE. Don't you fiddle around with it. Just give it. You've gone out of focus for a second, but we know what you look like, Mark. Don't worry. Yeah, you're back. But the vast, the bigger chunk of the audience are happy with moderate latency and whatever, and perhaps they can't cope with it being too raw. And with all the calculations and analytics, I mean, a firm could do that themselves. They could take your raw data and they could do all the analytics themselves. But that's quite costly. So I'm picking up the vibe that you think there's a largish market who want you to do the analytics. Can you describe that, explain that a bit more?
So analytics, I think, has become a passion of mine over the past couple of years. And this is something we really grappled with I say the early days, 3 or 4 years ago, when we started building some of this infrastructure, is to say, does the exchange have any role whatsoever in the analytics space, right? And I think our resounding answer to that is yes, absolutely. Although we have paid some school fees and had to learn some new skills rolling that out. But I'm feeling far more bullish today than I was 3 or 4 years ago. And I think there's a few benefits, right? I think first of all, the exchange has got access to data that nobody else does. Now in a world where trading is generally confidential and anonymous, we can't publish that raw identified data into the market, but we can start to aggregate and create some data products that are really unique. But these are typically called flow analytics, whether it's kind of a principal agency split or res non-res split or retail insto split. There's different ways to look at that. But I think the exchange is starting to realize that the wealth of data that we sit on can create really unique insights. Ranking is another really important one. So that's the one lens. I think the other lens is that analytics doesn't have to be secret sauce. And this is an interesting concept because we kind of have this model in our head that consumers and traders have got these sort of huge teams of data scientists that are working on proprietary work. But at the end of the day, we know from the literature that 70-80% of that time goes into collecting data, cleaning data, running commoditized analytics that are public, not proprietary. And in the same way that the exchange is really good at service level delivery of raw data, my sense is there's a world where the exchange can be really good at delivery of commoditized analytics. So how do we collect the raw data? How do we make sure the tick data is clean and complete and accessible and query ready? How do we give you a number of sort of generic market quality or market structure queries on top of that? How do we help with ranking? So these are things that, yes, the firms can do themselves, but they shouldn't
But they
have to.
can't, because some of the data they don't have access to.
Some of it, absolutely. Some of it is unique, but others you end up paying, very skilled and expensive, frankly, resources,
Right.
a lot of money, and everybody's doing the same thing. And why can't we do that at source?
So there's an economy of
So
scale, because you're doing it once for everybody. But I mean, I'll throw in another. I mean, there's another set of players here, which are the data vendors, the aggregating data vendors, because they, I presume, I know they do. They get in on the Analytics Act. So there's you, the original source of data. There's the data vendor, and there's the customer. Again, unfair question to ask you. I mean, your colleagues, your peers in other exchanges. I mean, I presume this wouldn't in any way be collusion, but ideas on, if you're doing analytics on the JSE, I presume the same ideas probably would work on the Toronto exchange and or the London. I mean, how does, it's not collusion of any sort, but a cooperation on working out what analytics an exchange could do would seem logical across exchanges.
Right. Absolutely. And I want to spend a bit of time on that, but I think I must stress that the world of data aggregators is really important to the whole ecosystem. But really, their game is normalization and scale.
Got it. Aggregation.
And
aggregation.
Absolutely. Yeah. And that's the kind of the fuel that keeps the markets running. And we're not challenging that in any shape or form. But I do think a local exchange can bring local expertise and local nuance in a far more bespoke way, and probably more quickly than some of the aggregators can.
And that means that what you're doing in Johannesburg would be different to what somebody would be doing in Toronto or in Frankfurt or in Sydney.
Yes, and no. So let me tell you what I think is really exciting here. So we've built David, we've built a product, and I don't. This is not a punt, but the context matters. I think we built a product called Trade Explorer, which we've rolled out by domestic equity market brokers. And the idea is really, how do we put some visualizations on the desk of the trader or the head of trading to say, here's your market share, here's your ranking, here's how you're performing relative to your peers, here's some really powerful market quality and market structure analytics, and some specific JSE numbers for the day so you can track what's happening. And that you can embellish with some commoditized things like pre-trade analytics and global market share and so on. But at the end of the day, the idea is that there's no infrastructure cost, there's no IT, there's no systems or integration. You sign the contract, you order up today, you get the login today, you've got 5 to 10 years of history on your desktop today. Right. It just works. Now, the reason it works is because the exchange has carried the infrastructure build cost and risk of that, and therefore we can roll it out at scale. As an aside, before I answer your question about other exchanges, as an aside, what's been a really powerful story for me is that some of our smaller domestic brokers have been really interested in the service. And the view there is that perhaps they wouldn't have the financial investment wallet, if you like, to build that themselves. So there's almost a democratization effect to say you can now get access to these things. The same analytics that the global bank has got in our market, you can now get as a small, ETF focused specialist broker. But that concept of Trade Explorer, we think, maps really, really well to other exchange markets. Perhaps more concentrated markets, because there is a benefit here that the more concentrated the market is, the more JSE stats.
When you say a more concentrated market,
less fragmented. Less fragmented in terms of trading venues.
Right.
Because the JSE only has data for the JSE, right? We don't have data for the other trading venues.
Got it.
But certainly we're spending a lot of time and energy talking to some of our exchange peers to say, what does this thing look like as a more generic white label solution, and does it just plug and play?
Is it almost advantageous to you if other similar exchanges with a similar profile were offering the same thing. I suppose customers would find it easier to understand if every exchange, and this is one of the criticisms, not of exchanges, but of the situation, that actually all the exchanges do things differently. Yeah. And that's a big problem for customers. It's nobody's fault. It just evolved that way. I mean, so in this analytics space, a bit of cooperation might go a long way.
And not only that, so yes, I think the innovations come through far more quickly. So an innovation in one country can flow into another country. But I think what I have learned is that by choosing the right partner and branching out from some of the kind of the real legacy trading platform questions, I'm able to move much faster and nobody's ever said thank you to the exchange because they're so fast or so innovative. Right, and I think for the first time we're working with a company called Big XYT.
I looked that up. Yeah.
And they've really helped us to come up with a model that is responsive and iterative, and that's your bread and butter stuff in the analytics space. This is not we launch a trading engine and we keep it stable for 2 years. We actually want new dashboards and new analytics and constant innovation, and that mindset shift. To say actually an exchange can play that role, but and remember what you're combining, right? You're combining your unique data sets with a deep understanding of the local market,
and with
but also a very good set of relationships with your asset managers and asset owners and vendors. So you can have a conversation about it.
I mean, I'm mixing things up here, but obviously, when you've got this analytics service and you're partnering with Big XYT, etc. But another thing you mentioned as well is this whole concept of APIs and what have you. I mean, I presume you're adding value by creating analytics and providing those. But I suppose what I'm asking you, do you then enable people to enhance those analytics, to have APIs to say, okay, I really love those analytics, but I've got a bit of secret sauce myself that I want to sort of enhance and build on that analytics. Is that something you encourage and allow?
Absolutely. Absolutely. You have to. And so I mean, what we have done is we've enabled API access to all of the analytics. The kind of people that we're dealing with, demand modern connectivity, demand access to the data. We're not using it at the moment as a sort of a tick data distribution mechanism. So it really is about the analytics, not about the raw data. Right. And because of that, we're quite happy for our customers to distribute those analytics, because often it's been quite powerful for them from a business development point of view to say, kind of, here's an exchange endorsed number that says number 3 in ETFs for last month in terms of market share. And that becomes a very, very powerful tool to have a JSE stamp on. So yeah, I think there is certainly that flexibility.
So there's adding value to added value. It's a sort of multiplier effect is yes. Possible. Mark, I'm conscious of
where it goes. Where it goes from the next step is to say, well, okay, actually these things are all completely intertwined, right? The same platform that's processing our tick data for analytics could very easily deliver that tick data in a raw format, or could very easily allow you to import your own house price, for instance, and run your own confidential analytics on the platform. And those are things that we are spending a lot of energy thinking about how we evolve to the next level, because I do think that consumers spend an inordinate amount of money processing and storing raw tick data.
Yeah.
It is very expensive to buy. It's expensive to store. So we are starting now that we've built some credibility domestically with analytics, we're starting to get some of our own brokers in particular come to us and say, but listen, you've got all of this data stored already. Why should every company in South Africa store the same data? Give us a space where we can bring our own confidential data in and let the two data sets interact, and we can use your trusted history on some kind of consumption-based or license model without getting bogged down in, how many gigabytes and
presuming the cloud plays a part, is one of the moving parts of all this. Mark, I'm conscious of time. We're at 53 minutes now. I knew we weren't going to managed to talk about it. I mean, briefly, the whole bit about the frictionless administration and ordering. I mean, again, we haven't got long enough to talk about it in detail. But what are the highlights of that? And I want to throw one word in: trust or lack of trust, which is an issue between customer firms and exchanges. Exchanges think customer firms are thieving their data and need to be brought to boot, and the customers think, how dare these exchanges, not trust us. I mean, that's a vast simplification. How are you solving all this?
Yeah, and again, the answer lies in between innovation and choosing the right partners and having the right conversations with clients, right? So in this space, a lot of our work has been with DataBP.
Yeah.
That's one of the partners we've worked with. And I think, I'll come back to the trust bit in a second, but I do think there's a workflow automation piece that takes a lot of friction and therefore a lot of frustration and pain out of the system. So a lot of our investment has been to say, what do we think a client portal actually looks like for an information subscriber? And what kind of things should you be able to do in there? This is coming from a world where we've got really long PDF price lists, where contracts are long and complicated, where there's lots of order forms. It's difficult to know what you actually contracted for. It's difficult to share that within your organization. Invoices are complicated to process. I mean, just to give you a very simple example, you can buy market data from me. You can pay monthly in advance or monthly in arrears or quarterly in advance or quarterly in arrears or annually in advance. Or, I mean, you get the idea, right? Put that into an invoice, put that into a price list. It becomes very, very difficult. So I think our theme has been, how do we simplify and how do we rationalize and how do we use technology to leverage that? So we've ended up with a client portal that we really want to manage the full customer experience, kind of from understanding, what you've already signed, seeing what you've already signed up for from a whole organizational point of view, putting that power into the data procurement officer or data procurement specialist at the client, so it's not wildly distributed across everyone at the client, having visualization very clearly into what is the catalog of product that is available to you, what does it cost, what are the license implications, being able to sign up digitally online, being able to sign that contract digitally, being able to have some sort of post-box notifications around price increases or product discontinuations or new, kind of in a central place. So that's the vision, right?
I mean, you automate
get
that.
Rid of the emails, get rid of the PDFs, get rid of the phone calls. How do you make it self-service and how do you make it easy, I think, is the objective.
But you still lack, not you personally, but exchanges still lack that line of sight with more data feeds and what have you. The problem I perceive is you don't know what is being done with your data south. Once it's gone into that client organization, you don't know what's going on. And basically, I think you used the word attestation. Basically, they tell you, this is what we're doing with it. And the problem is, do you believe them?
Mm. So what I do believe is that my clients aren't trying to cheat me. Right. I don't think there's malice or dishonesty, but I think that these are complicated spaces, and one of the key points I think for any exchange is the leveling of the playing fields. Is to say, I cannot charge one customer for service and not charge a different customer, because that really puts them at an advantage from a commercial point of view. And in highly regulated markets, that's not appropriate, right? So whether you think about that as recovering underpaid fees, or compliance, or audit, or true-ups, or however you want to do it, I think it's important that we work with our customers to make sure that they know what they're getting and that how they're using it, and that they have got confidence that we're treating all of their competitors exactly the same way. Right. So, I mean, so that's the dream, right? I mean, everybody wants that. And obviously our customers want to manage their own costs. They want to understand, what is the usage inside the organization and how do they track that? In the same way that I don't always see what the usage is. I'm not sure that the procurement teams see what the usage is either within those organizations. And how do you manage a data cost that sometimes feels unmanageable? So I mean, I don't have a KPI around, getting enormous backballs from clients. For me, I would be much happy if I knew that all of my customers are compliant, and are up to date and are being treated fairly, and that we don't have kind of big liabilities building up, that doesn't do anything good for anyone's relationship or confidence in the system. How to do that as an industry Uh,
It's,
I
but
think we need another hour. For that.
yeah, we look, Mark. We are at the end, frankly, but as I promised you, look, if there's a couple, one or two, something you just didn't get to say, because actually we didn't cover a lot of the things that we have on our lists, because frankly it would take too long. As I was saying, is it Joe Rogan and his 3 or 7 hour podcast? So, but as you said politely, I wouldn't listen to that long, David. So look, last 1 or 2 points, just hit the audience with them.
So I think the theme for me really for the next 5 years has to be innovation, and that is going to be disruptive. It's going to simplify things. I think there's a world where partners are more and more important. And I get there are a lot of competition concerns and collusion and pricing concerns. But if we think about, if we think a simple thing, how do we align as an industry? What does retail mean as a definition?
Yeah.
So I think there needs to be a coming together of minds to say, the things that we can standardize, let's standardize them. The things that are commercial, let's leave those alone, but to the extent that they're not regulated, of course. But I think we're seeing an increasing industry conversation. And I would say maybe as a closing point that I think exchanges are trying to do more. And some of that, yes, is to diversify their revenues, which takes some of the price increase pressure off in other spaces. But having said that, I do think exchanges are in a very unique space, particularly in the data analytics space, to do things that haven't been done before, to come through at a lower price point, at a more scalable price point. And I'm personally really excited to see where that journey takes the JSE and other exchanges like us.
That's an optimistic, positive note to conclude on. I think, I've worked in this industry 41 years, and there's a certain amount of sort of same old, and I think breaking free from that is healthy and positive. And I'm very conscious that sort of oldie people like me sometimes are a drag, and that can't be done. We tried that 10 years ago, therefore it's impossible. And I think innovation and positivity is good. So, look, I'm sorry we didn't get to talk about everything, but I'm really pleased what we did talk about. So I think,
pleasure, David. Thank
you. And likewise. So, as I say with all my guests, don't hang up. I'm going to stop the recording, but I'll say thank you and cheerio.
Thank you so much. All the best.